Right, what's happening with China on the macro outlook, and why does that matter for copper? And also, what's happening with the USDCNY or the renminbi? These are a couple of questions I'm going to be looking at with this presentation. This is one that I did a couple of weeks ago, so I just want to take you through really the highlights actually, so we'll just get straight into it. Start off here with the activity indicators. Basically got the PMIs, and these are the official ones, and then on the right hand side you've got it against the copper price. The key point there is that activity has topped out. It hasn't really rolled over, judging by the PMIs just yet, but you can see there that there's this massive turnaround from 2015-16, and there's a few reasons behind that that I want to get into. I don't like to spend too much time looking backwards because, you know, you think about investing, you think about what investors are actually concerned about. They're concerned about what's going to happen, not what has happened. But, you know, oftentimes I find that if you understand the key drivers of the past, you can probably get a good idea of what the key drivers are going to be in the future. And on that front, we've got here the stimulus indicators. So on the left-hand chart here, there's the monetary conditions indicator in the blue, fiscal thrust or fiscal impulse in the black. And they went from actually quite tight in 2014-15 to a big turnaround from 2015-16, which, you know, went from tightening to stimulatory, both monetary and fiscal. And back then I was feeling pretty bullish on emerging markets commodities. And, you know, because basically if you see China going into stimulus mode, it's game on for those asset classes. But now we've seen that actually come full circle. And, you know, when it comes to copper, which I'll talk a bit more about later on, you know, since probably late last year, I think it was late last year, the turn of the year, I've been getting increasingly bearish on copper. And, you know, it seems like only lately the market seems to be catching up to that, which we'll talk a bit about further soon. But anyway, property, similar thing here. So we've got a leading indicator, composite leading indicator. In 2015, property market was thoroughly in a downturn, and then you've seen this big turnaround in the lead indicator and the market rebounding there. So, you know, it's just the repeating theme that you're going to see here is from tailwind to headwind. So property went from a headwind there to a tailwind. Now it seems like it's going to be going into a headwind soon. And then just, you know, highlighting again that the property market looks to have topped out at least. And exports is another key area. So again, in that 14, 15, 16 period there was this soft patch in export growth. And that was partly due to actual currency strength in China, and also just a slowdown in global trade as well. But since then, both of those factors actually turned around, so global trade improved. That was another big key theme that I was talking about at that time, you know, thanks to the lead indicators there. And the currency went, you know, eased off quite a lot, but that also reversed recently as well. So, you know, it went from headwind to tailwind and back to headwind again. And if you look at global trade, we're seeing a little bit more mixed signals there lately. You know, and you throw the trade war or trade skirmish issue into that as well, and, you know, the export picture doesn't look too good. I won't spend too much time on the consumer here, but I will note that, you know, the consumer is pretty strong at the moment, and you know, that makes sense because typically the consumer, most economies, you tend to see the consumer do the best last, and, you know, you'd expect the consumer therefore to roll over later, you know, as some of those other factors roll over. Inflation largely contained, and that's pretty key because that allows scope for monetary easing. Economic policy uncertainty has spiked, and that makes sense because, you know, there's a trade war going on. And, you know, also domestically, policy uncertainty is fair to say is elevated because the economic outlooks are looking a little bit less clear, and just that move into tightening or tighter conditions. So what I've got here is a bit of a map of the key, what I think are the key drivers for the cyclical outlook for China. And so we'll start off with the orange dot there. It's property. It's technically it's good because it's the prices are increasing year on year, but it's rolling over, so it's getting worse. And I think if you follow the lead indicator, it's going to go from good to bad. Trade is also still technically good because it's expanding year on year, but again the directionality there is towards the bad side, bad and getting worse. On stimulus, it's on the bad side because it's tight, but you know, it's definitely moving. I think the directionality there is definitely towards the good side. So that's, you know, if the stimulus indicators or the stimulus dot there is on the better side, that means that they're easing. So I think that they're already making steps into easing and will do so even more. The triangle there is reforms and crackdowns. Haven't heard much on that front lately. It's basically neutral, but that definitely is going to get put on the back burner should we see a bit more cyclical weakness, which is basically the base case here. So you got so in summary, you've got property rolling over, exports rolling over, stimulus settings are still in tightening mode, but expect them to go into easing. And so, as I mentioned, copper, where the rubber hits the road. So if you have a weaker economic outlook for China, that matters immensely for copper, because China is still, you know, accounts for about half of the world's demand for copper, so they're definitely the marginal buyer, and what's happening in China is going to be impacting on copper, you know, definitely big time. So the chart on the left, all the way on the left there, is probably the key one to focus on first. We've got China 10-year government bond yields that actually rolled over you know, at the turn of the year, and that makes a whole lot of sense, because you know, if you think about 10-year government bond yields, unless there's something going on the sovereign risk front, which there isn't for China, then you know, usually those 10-year bond yields tend to follow the inflation growth pulse, and for China that's clearly rolled over, as I've showed you previously. And so, you know, it makes a lot of sense that copper would ultimately follow that down, which is starting to catch down to, or catch up to, depending on your what side of the coin you want to look at. Then all the way over on the right there is so you basically got copper there stalling out at that really key resistance level, and it lines up again with that stimulus picture going from tailwind to headwind, and you know, and also just the broader, you know, activity. So the PMIs topping out, property topping out and rolling over, export growth rolling over as well. So you know, I still think that the bearish bias for copper is justified. And another area where that's been expressed, or you know, certainly something that I've been paying attention to, is the copper stock mining, or copper mining stock relative performance. So you've got global copper miners relative to MSCI World, and the fact that they have really lagged behind speaks to a sort of skepticism, I guess, by copper analysts, that you know, the fact that didn't catch up to the copper price, there was that divergence there, is, you know, definitely a bearish signal to my mind. And then you've got a breakdown through that little short-term upturn trend there as well. So again, I think that the outlook for copper is that it gets weaker from here, and you know, and that's largely dependent on that China macro view. Again though, if you go back to that map of where the economy is going, if they feel enough pain and decide to turn the handle on the stimulus, like really shift the dial there and move all the way into good and easing, you know, more forcefully, then that's going to change the game once again for copper, because as I mentioned back at the start, we'll jump back on that stimulus indicators chart there. You know, if you had just been watching that and nothing else, you probably would have been getting bullish on copper, you know, back where we go down, you know, during that period there, which would have been the right move. But the other one I wanted to talk about is the USDCNY, the renminbi, or Chinese yuan. And the path I've got here, you know, little summary, the path of least resistance is devaluation. And there's, you know, there's a few reasons behind that. The first one is the macro picture, which I talked about at the start. You know, with all those things rolling over, then and for the US, the economy is still just ticking along there, so you've got this sort of macro divergence. For exchange rate, that matters immensely. But you also got policy divergence here, and you can see that in that red line. Quite remarkable, really, because if you think about USDCNY, it's quite a managed exchange rate. They've definitely moved more towards the market side, but it's still definitely managed as well. And basically, if you took the policy rate differentials literally, it would be saying that the USDCNY is going to go above 7. I think it will definitely approach 7. I think there's definitely a risk that it goes past 7 as well. But 7 is really a pretty critical psychological point for the market, and if it does break that level, I don't think there's going to be, I don't think that the global market's going to be able to stay as complacent as they have been till now. And if you look at the accompanying chart there, there's pretty clearly been a shift in monetary policy underway already. So you can see the 1 month interbank rate there, it's basically collapsed. So the PBOC is basically going into the market and easing things. We could call it a stealth easing because they haven't really used the benchmark rate as such yet. And they've definitely been doing a bit of window guidance as well, telling the banks to cut rates to SMEs, etc. So you can see there's definitely some easing going on below the surface, and at the margin, I mean, it's not going to be as much of a devaluation pressure as, say, a benchmark policy rate move, but I think it's a big ask to see a move in the benchmark policy rate. I think the only way that you'd see that would be that either the economy rolling over much faster than expected, or as a signaling tool for global markets that they wanted the currency to weaken, which I don't think they necessarily would want to do. But if you think about the third reason why the currency, why devaluation is the path of least resistance, it's the politics aspect. So think about the trade war aspect. If you are a Chinese exporter and you bill and your invoices are in US dollars, if the currency weakens, that's basically like a tax cut, and tariffs are basically a tax hike. So if you've got a tax hike and a tax cut, you're probably, going to be actually no better or worse off. So that's something pretty key there to think about as well. I don't think that they would go out and, take an explicit policy of devaluation because of all the political baggage that would take with it. But if they just stood back and took their hands off the market would probably move it in the direction of the fundamental story that I just outlined. So, they could definitely play that card by not actually even playing it, but by indirectly playing it. So it's pretty compelling picture still for more weakness on the renminbi. And I think I'll just wrap it up there. I did also talk originally in that presentation about US dollar and emerging market currencies, emerging market equities there, China A shares. But I'll just leave it at that. If you've got any questions, put them in the comment section of the video, and if you want to get in touch, if you want to get a copy of this, just go to topdowncharts.com and fill in the contact form there. Otherwise, subscribe to the channel so that you don't miss out on any future updates.